You were listening to chartingwealth.com for Tuesday, the 13th of February, 2018. We see the market up for the day on the S&P 500, 1.47%. The Q's up for the day, 1.77%. The 20-year bonds up 0.44%, and gold up 0.48%. Now, we started off, unlike what we usually do, looking at the 4-hour charts. Why? Because new folks would probably be very confused by the fact that the first day of the latest weekly candle is down. Why does it look that way? Well, because the average pace is still down in these markets, particularly with all of the strong down movement in the prior week and the weekly vertical crossover at the end of the last week on the 9th, Friday the 9th of February. We see the derivative oscillators continuing to gain lots of downward momentum. Price percent oscillator moving down strongly. So as we continue to keep an eye on what is going on with these charts in this new week starting up on Monday the 12th, we see again a forming red down candle, and as we look closer into the 2-day chart, see that the latest 2-day candle is a green open box, again, right about mid-center, about center, I guess mid is center, isn't it, of the prior 2-day movement down. Now, this is just the first day of the latest 2-day candle. Derivative oscillator still gaining energy, downward momentum, and the price percent oscillator gaining downward momentum. And of course, as we look at that 4-hour chart, we can see up in the morning and the afternoon. Don't have a crossover going up. This is what we call a potential pullback. And folks, that's fine. If the charts want to turn around and move up on this short chart for a while, that is fine. Chances may be that they will rotate back over moving down and give us a jumping in point. If that is the case, all fine and dandy. That is great. We will see what we will see. But we did not have a jumping in point in the morning for the weekly vertical crossover going down because of this pullback that started underway quite early. Now we will go back to but we'll continue to watch. And if they do roll over, we're going to be the first jumping in since we're primed to do that, both with the weekly vertical crossover going down, just happening back on the last weekly candle, and the 2-day chart heading down. As we go from the S&P 500 to QQQ, what do we see? Well, we see again a weekly down candle, derivative oscillator gaining downward momentum, price percent oscillator heading down strongly. As we look at that 2-day chart, we see that it's continuing to gain downward momentum as far as our indicators go. We see, however, price again about mid-candle of the prior 2-day candle, again, just the first day of the latest 2-day candle. So we'll continue to watch. And as we look at that 4-hour chart, we can see that it may be heading up for a crossover. And again, that would be a strong pullback. When and if the market rotates back over going down, we'd have a good jumping in point on something that looks like what happened back on the 30th in the morning on Tuesday, the 30th of January, when we had a crossover going down on the blue crossing over the red on the price percent oscillator. Now, again, that may or may not occur. If indeed it does, and it again usually will, simply because we had enough momentum down to turn that weekly vertical crossover into a move down. So we shall wait and see what we shall see. Remember, we are not forecasters. We are trend followers. We will let the market tell us what to do. What are we seeing on TLT, the 20-year bonds? Remember, we had a weekly vertical crossover going down back on the week ending the 5th of January. It has been beautiful. 1, 2, 3, 4. Going into the 6th week of down movement, we see that price movement well below the 2-day and the weekly trend lines, and we see derivative oscillator gaining downward momentum along with the price percent oscillator. As we look at the 2-day chart, what do we see there? Well, we see a bit of a pullback. The first day of the latest 2-day candle, price movement still well below the 2-day and the weekly trend lines, derivative oscillator going flat. Price percent oscillator still headed down. As we focus a little bit more intently on what went in for the day, we can see it looks like this is happening we're going 3 days now of bottoming out somewhere around 118.20, something like that. So it may be rotating over, going up, may just be taking a breather and getting ready to head back down. But again, if you jumped in somewhere back with the weekly vertical crossover when the market opened back up around 125 and it's gone all the way down to 118, that's pretty darn good in a short trade. And again, that is either buying a put or getting into an inverse fund. And again, this is called shorting, and that is something that we talk about, that we teach. And in fact, the easiest sort of entry to it is go and watch our video, Inverse Markets, How to Make Money When Markets Crash. That'll give you a bit of an idea of just a simplistic way to start approaching it and understanding that you can learn to make money when the market goes up and down. In fact, my personal experience is I've done a whole lot better many times in down markets than even in up markets. So something for you, again, to practice. Remember, we're not a stock calling service. We don't give investment advice. We're an education firm. We want you to practice with us. So again, keep your eye on the prize. We may be having that pull back over, and you might see bonds move back up for a while. Maybe not. Just keep your eye on things. That's where we are as far as bonds go. And we're going to go back to the weekly chart, spread things out a little bit. And lastly, we will take a look at gold. What do we see going on gold? Well, gold was up for the day 0.48%, and we see with gold that it actually topped out all the way back on the week ending the 26th of January, and for the last 2 weeks down, and so far for the week down. We haven't had a crossover going down yet, but derivative oscillators losing energy, price percent oscillator is heading down on that weekly chart. As we look at the 2-day chart, we can see that again we've got a bit of a green spinning top, some indecision tending up. However, derivative oscillators continuing to gain downward momentum, price percent oscillator headed down. Remember, the 2-day chart did cross over going down back on the 2-day candle ending the 7th of February. And then we shall go to the 4-hour chart and take a look at things and see what we see. And it looks like gold is somewhere bottoming out around the 124.75 mark or so. Hasn't crossed over going up yet. Could just be taking a breather. But again, our 4-hour gold chart did start working again for us. It started trending finally. So keep your eye on the prize. Maybe it usually works this time of year, but it got really crappy on us there at about mid to late January. So we need trending prices in gold to have this 4-hour chart work for us. So let's see if it does cross back over going up, if it's going to start working again. Remember, we really are a bit schizophrenic in gold with the down move on the 2-day chart and the up move on the weekly chart. It does not give us our traditional method of trading. This 4-hour chart really starts becoming reliable. Again, remember, it has in the past been a total trading chart for us in gold. So please feel free to practice that. Please make sure that you're filling out your weekly market worksheet once a week. That would have been filled out over the weekend for today, for Monday, and of course for Tuesday, the market that we're going into. Please make sure that you are filling out your daily market worksheet Tuesday, Wednesday, Thursday, and Friday. And of course, every time you do a practice trade, if you're going to jump into potentially a gold trade rotating over, going up on that 4-hour chart, or whatever you're doing, make sure you fill out the trade worksheet. All of those are available for the folks that subscribe in our daily email. How do you become a subscriber? You just go to chartingwealth.com, put in your name, your email address, and boom, every day the market's open, you'll receive our video along with all of the text and information that we have for you, including our daily market worksheet, weekly market worksheet, trade worksheet, discount on the paid service of freestockcharts.com, TC2000, save you $25 if you sign up for that, and all the other great things we have to offer, plus all the great trainings. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.